I got my first car when I was 16 years old, and I was able to get it by financing it through a credit union. I wasn't able to get a loan from a bank, and this was at 1980 Toyota Celica Coupe, which is, for a 16-year-old, basically your passport to freedom and adventure. Now, in looking at, as we progress from that stage of our lives into adulthood, apparently something changes because, according to U.S. stats, 94% of the consumer banking market is served by banks. That means only 6% is served by credit unions. And I think that's a shame because credit unions are a great deal, and for those of you from the survey, 2 of you belong to credit unions, the rest bank with a bank. And I think it's something for you to consider, and what I'm here to suggest to you is that you should move your banking relationship from a bank to a credit union. And there's basically 3 reasons why. One of them is because the convenience and the accessibility that credit unions offer. The second is the rates and pricing. And the third reason is because credit unions have a social mission that inspires people. So in terms of that first point about the accessibility and convenience, let's say you lived in Torrance and you wanted to bank at a place where you could get really good, convenient access to ATMs and branches. And if that was where you were at and you wanted to have that convenience, you'd probably bank at a place like Wells Fargo. So this right here is the network of ATMs and branch locations for Wells Fargo Bank. Now, if instead you decided to bank with a credit union, here's what your network would look like. Boom. We have about 3 or 4 times as many locations with a credit union. And the reason this happens is because credit unions all work together in a network, and as long as you're going to a credit union ATM, it's as if it's your own ATM. You can even put a deposit of a check, and that other credit union will make sure that it gets over to the credit union that you bank with. So that's it in terms of the access. And if you were to do this same sort of search anywhere else in the LA area, you'd find pretty much that same disparity between large banks versus credit unions. Now, what about the service? When it comes to customer service, one benchmark that a lot of companies look at is the Net Promoter Score. We're all familiar with it, and a lot of our companies probably use Net Promoter. Net Promoter is basically the difference between your promoters, which are people who rate you as 9 or 10, and subtracting out the people who are detractors. Now, based on the fact that it's a net score, it's really difficult to get much higher than, say, 25 or 30%. That's actually considered an outstanding score. So you can go to npsbenchmarks.com and find the Net Promoter Scores of many organizations, not all, but U.S. Bank, which is a well-respected local bank, they have a Net Promoter Score of 3. Wells Fargo has a Net Promoter Score of -12. And Bank of America is -24. So that means they have way more detractors than they have promoters. On the flip side of it, credit union, now in full disclosure, I think you guys know I work for a credit union. My credit union's Net Promoter Score is 83. So it means that we're basically running the table when it comes to getting our members to be promoters. And we're not alone in that. We have local credit unions in LA that are actually doing higher than we are. And it's a common concern of ours is how can we improve our service? And so from that standpoint, I think credit unions offer, hands down, a much better deal. The second point I mentioned is pricing in terms of rates. You can go to bankrate.com and you would find that if you have top-tier credit and you want to get, say, a 60-month car loan with Wells or B of A, you could do about 2.5%. That's kind of their premier loan rate. With credit unions, same loan, same tier of credit, you can do about 1%, 1 to 1.5%. And that's actually structural. You will find that to be the case pretty much across the board based on the structure of credit unions because they're set up as not-for-profit. And as such, they don't pay any state or federal income tax. So that 35 to 40% or so that all banks have to pay, credit unions don't, and they translate that back to their member base in terms of savings on rates and pricing. So that not-for-profit status ties into my third reason I think you should move to a credit union, and that's that credit unions have a social cause. As an insider, I can tell you the mantra, the unwritten mantra, is people helping people, and that's, maybe there's sort of that warm, fuzzy side of it, but there's actually very practical things that credit unions do to play that out. About 10% of credit unions have a low-income designation with the regulators, which means that their bylaws and charter is set up to basically compete against these guys, the payday lenders. Now, you probably, I'm guessing, not one of you has ever had to go to get a payday loan, and you may never have to do that personally, but you may have family members or friends who do. I do. I have 2 family members who do, and I can tell you, having witnessed some of this firsthand, is that the way these companies operate is that they price their product and they price their terms in a way to sort of encourage people to get into a cycle of dependence. Now, they will say that they're providing a good service, which, there are people who couldn't get support from a bank because banks won't touch this. The problem is the pricing and the rates. Payday lenders charge between 400% to 600% APR for payday loans. So wouldn't it be great if there was an organization or an industry, really, that was out there that was able to provide the same kinds of products, but instead of doing it at, say, 600%, they could bring it down to 35 to 50% and still be able to make the return. Well, guess what? So if all of that sounds of interest to you, and you want to know what next, what I would encourage you to do is go to this website, punch your address in. It'll provide you the names and locations of credit unions that you can join. Large credit unions are extremely advanced digital technology organizations. Everything can, for the most part, be done remotely. You can sign up remotely, and once you do that, find one, shop it around, and find one that seems to work for you in terms of their mission, because they do have different strategies and such and different products. But once you find one, I encourage you to plug in. And when you do, you'll find that you get the better service and convenience, you get the better pricing, and then you'll also have that satisfaction of knowing that you're working with an organization that's part of an industry that's out there to help people get back on their feet. Thank you.
Okay. 7:40.